We're here to talk about understanding, I guess, the geopolitical tensions around the world and conflicts that are going on and how to view them from an investment standpoint. So maybe you could explain what specific factors within a conflict can influence the market's behavior, such as the geopolitical tensions, sanctions, or even military conflicts.
Before I do that, I really want to express my empathy to all the civilians who are in a difficult situation around the world in different disputes where they are involved in. I think it's really important in all of that investment world and everything we do that like the humanity plays a role in. To your question, then, there are different aspects where it can have an impact. So one question you should ask yourself is, what region is the dispute taking place in? And what task or what position does this region have? Is it involved in like the supply chain of a certain product? That can be by having a certain know-how, a certain like industry in this area, but also like in mining maybe some raw materials or producing or shipping oil or there are so many different areas where it can have an effect on the markets through having an effect on other companies.
That's very interesting and points us in a good direction. So, are there particular industries or sectors that I guess seem to be more sensitive to these effects?
Yeah, sure. I mean, companies that have their supply chain like globally or rely on one specific region, they are more affected, obviously. And also, like what you also should not forget is that oftentimes through such disputes, I mean, it does not only have to be like military conflicts; it can also be like a trading conflict, as we also had in the past. What it does, it adds on costs. It makes things more expensive. So inflation is an important part in that. So when things become more expensive, you have to think from the perspective of the people, what is most important? Food is most important, surviving is most important, water, and maybe some other products like electronic products or luxury goods might lose some of their attractiveness because people have to take care of themselves first before they can treat themselves with some specific other products or services.
When looking at an investment strategy and investing in general, what are some of the key differences in how short-term versus long-term investing might be affected by these conflicts?
So in the short term, I mean, whenever there is a like a conflict raising or coming into the world, there is insecurity. And this obviously has an impact on markets. But it is also important to look back on history and to see, okay, like in the longer term, how do companies do? And there you have to think about, I mean, what's the job of a CEO, for example? Obviously, it is to lead the company, but it is also to solve problems. And if there are problems in the supply chain, in like raw materials or lack of a raw material, I mean, they have to find solutions. And in the past, oftentimes they did find solutions. And so the impact on the longer term is not as severe as in the short term. So I think in a situation where a new conflict arises, it is important to take a step back and look at the whole situation and then make a decision, like an informed decision. And don't get like led by the short-term volatility. Because oftentimes if markets come down, if markets are affected, it will be the broader market, which also includes the good companies, which will find solutions.
Is there a way that investors should adjust their strategy when it comes to investing, or should they hold course?
I would say in a first step, hold course, and then look at the specific constituents you have in your portfolio. Look how are they impacted or affected by the dispute, as I said, like supply chain, raw materials they need to offer their products or services, and then make a decision based on that.